Everything indicates a quiet week as we move forward, with only Fed speaking on Friday as the main event. You're listening to the StockInvest.us podcast, Trading Tips with Jim, as we're heading in to week 34. And I will, as usual, give you my best guess. Will it be a green or will it be a red week? Last week, I said I thought it would be either. It would not be anything in between. It would either be a green week or a red week with less volatility. And it became a super week, Nasdaq being up 5.29%. Maybe your portfolio was not up that much, because mainly the upturn was driven by the big players like Nvidia had a solid comeback. Dow Jones did also fairly well, up 2.94% for Dow Jones. We have Nasdaq back at 17,634, and if we rewind 1 week back, I told you the next resistance level will be around 17,500, meaning that currently Nasdaq is sitting just at the resistance. And here we will spend the first few minutes trying to lay the groundwork for my conclusion about the week ahead of us. As I told you last week, we were at the resistance level. Would it be broken? I expected the market to move upwards to 17,500 plus, where we are now. If it wouldn't, it would continue downwards. That made the conclusion that we would either have just a red week or a green week. Now we are at this resistance level, and last week I also told you that we just broken a short-term moving average up, giving a buy signal, but the next one would be where the resistance is. And currently we are just on the long-term moving average resistance, holding a sell signals, flipping almost to buy as we're balancing on the line. Meaning that if we get a solid break above, we will have buy signals from both short and long-term moving average. And due to the upturn last week, we can clearly see that the short term is moving much faster up towards the long term. If they cross, we will have a major buy signal after having a major sell signal if we go back to the end of July. What will it be? Well, there is a few things we can look at. We can look at how is the index positioned in the trend. Well, currently it's just around the middle. And for anyone following technical analysis and love these kind of tools, we know that it's very common for a stock to go from the top of the trend to the bottom of the trend. And if it is turning, we do know from before that we were in a very nice rising trend, which is broken. We have gone to a more horizontal trend. We do know that going up to the middle is very common, and again it will be a significant place where things can turn. It's a very, very high chance of turning. There is another thing we can use fan theory and a few other things, and usually they say that from the previous fall, you either go up 1/3 or 2/3, then you fall back again, and the next turning will be the more interesting. Now, if this is the case, we know that the Nasdaq was around 18,600 points, fell down to 16,400 points, and is now going up, and is almost up 2/3 of the last fall. So turning here will be, according to technical analysis, very, very natural, and then you can just expect a fall back to the 16,800 support, and then a possible upturn, and we can have again a possibility to get back into more better long-term trend, because currently, as I said, the long-term rising trend for Nasdaq is broken by significance, and it should take almost a miracle to get back into it. What we see now is just classic movements. We have broken trend upwards. We do not get straight into a falling trend. We get into a horizontal trend. It's very typical, and the market will try to decide where will it go next. So these are some technical things. We can also tell, for instance, that the volume didn't rise very much last week, but mainly because the broader market didn't go up. It was driven by some of the major companies. In our systems, we use something called pivot points. It's significant tops and bottoms. Works very well. You see it as green and red circles in our charts at stockinvest.us. And currently there is found a pivot top in the relative strength index. But the relative strength index is not overbought at all. It's 53. It's just in the middle of the tree. There is no reason why it cannot continue upwards. But from the current positions, these are also very classical signs of possible place where relative strength index turns. So from a technical point of view, we have relative strength index showing the possibility of going down again, and it has just measured on the amount of days going up, etc. So there are some sort of logic to these things. But the most significant here is the finding of a possible top in the relative strength index. We see that the volume didn't follow the last week's upturn in the market. We are heading for resistance levels. From a technical point of view, we can say that there is at the very best 50% chance for further upturn. I would actually say that from a technical point of view, at least the first few days should be a downturn in the market. We should fall back to the 17,000 mark before getting some momentum and trying to push upwards, and that may very well happen. I would actually say that from a technical point of view, there is at least 60-40 chance of a fall in the week. But we will not only use technical analysis, we will try to look what can be the drivers. Last week I told you there was inflation numbers and these things. Now if they came in at a certain level, that would fuel the market, and they just came in at expectations or a little better, which was good for the market. And if you read the news like I do, you see pages up and down about soft landing confirmed. Everything is okay. It's the best of the best. Cannot get any better. Market will get back on track. Everything will just be super. I am not sure about it. First off, if you read UK inflation numbers, they actually went up, and other inflation readings across Europe shows the same thing. And here comes the clue: energy is still high. Oil, for instance, sitting at $76 is not moving down as it should. The energy cost is very high. We see a huge change in consumer behavior. I've spoken over and over again about this in the podcast over the last, I would say, maybe even half year, because it's such an important element for you to know. And if you saw Walmart's CEO, either his interview or the transcript of his comments, so he said that Walmart also see a clearly sign among the consumers of a changing behavior. You are going for more towards the necessary items than the luxury items. Now they managed to keep quite nice profits after all, and didn't say anything that it would be doom and gloom, but they say a very, very sure sign of consumers having a strong focus on buying more of the things that's necessary. And I gave you a few tips and advice during these months. Now we see the consumer behavior. Maybe you should get out of some stocks and into other stocks, because the consumption will be there. It's just it will move from luxury items to more necessary items, now confirmed by Wall Street. I expect these things to continue much, much further, because it takes a huge time before the delay of increased interest rates, the delay of inflation, all of these things takes a time before it's hitting the wallet really hard. And that is why they keep juggling between soft landing, hard landing, etc. Because you really don't know exactly when it happened. There are a few markers, and some of them is when you start with the delinquency on your house payments, on your credit cards, etc. And these are record high. So everything is showing that the consumer is stressed, and by the end of the week, on Friday, as I said, Fed will talk. Right now, everyone believes that there will be 0.25% reduction in interest rates in September, and they want Fed to confirm it on Friday. So we have to wait till Friday to know. It might be that they will reduce interest rates a little bit, but I am not so sure. I told you over and over again, I like to bet. And over these 5 years of doing this podcast, I predicted the huge inflation. I predicted the huge increase in interest rates. the war in Ukraine and a few other things. Been right so far on most of it. The nice upturn in gold. Gold currently sitting at $2,543. Maybe you remember back when it was $1,600 and I said I am buying. And I believe gold will hit at least 2,500. That was first target. Now it is 3,500. I believe gold will start to escalate very, very fast upwards to 3,500. Still nice upside in gold. I hedged in gold because I was not sure how markets was moved. And if we go a few years back, we know that Nasdaq, for instance, was higher than, has been up at the same levels. Most stocks been up at same levels. With all these wars and all these things, I just wanted to have at least one item who could handle bad markets and bad situations and being a hedge against everything. So far, so good in gold. Some of the reason why I think things will kick back is because if you check all the quarter results, you see that the inventories are getting down. Now they will have to start to refill the inventories. The trade war with China is getting worse and worse by the minute, not only into EU, but also to US. There is tariffs on trades on everything, and who do you think will have to pay the tariff and the trades? The tariffs on the trades, who do you think will be the one to pay it? Most of it will be offset to you in terms of higher prices. And you read this in the call, you read this in all of the quarter results. They say the same thing. We have shrunken the items as much as we can. We have done everything that we can to just try to not increase prices too much, because the consumer will then just stop buying. Now there is nothing left to reduce. We cannot keep the bottle, make the bottle even smaller. We cannot go for less quality items, because that's usually what happens in food, for instance. Now you reach a certain level where the consumer will not pay anymore, and you just go from somewhat high quality product and you just start to change the ingredients with less costly items, reducing the quality, and you keep doing this until the customer says, no, I cannot eat this, or you get really bad reviews. So this is usually how the story goes. We are at all these breaking points. Either everyone else will be correct, that it will be a soft landing, and from here on you can just say hallelujah and be on the soft upwards train. My bet is that we still are not done with it. But this week will be quiet, only Fed on Friday. So really not much to worry about other than all the conflicts around the world, of course. The week after will be March, and I said 2 weeks ago, I said that now volatility will decrease. It will not be such volatile markets as we had. There will be a period of quietness. I expect this really to be the fact of the week. A very quiet week. It will go in one direction. Again, not too much up and down. Could be totally sideways, who knows, but it will not be this huge you see the market is down -2% just to end +1 during the day. I don't think that will be the case. I think it will be very, very determined, even from the very beginning of the day, will be more close to what it will end in the day. It's not a typical trader's dream. That was 2 weeks ago. The last 2 weeks we had this super trading environment where you can trade and make huge money, and especially if you do not sit overnight. Not so much last week, but especially the week before that was the case. As I said, do not sit overnight, because green goes into a really bad red the day after, which it did last week, much better so. So I think we have to wait 1 week. It will be a quiet week in terms of news. Then we will have to, next week, things will start to gear up again. I think that will be much more trading environment with much more volatility again coming. It can be that we will see some cracks during the week. The first signs of this volatility increases. Mainly, I think that you will see an outflux of the big spenders. They will change some of their positions. And there is no really good quarter results either, which can flip the market. There is no big players. Today, for instance, will be Estée Lauder and Palo Alto Network. Nothing big about them. Tomorrow is one which I like a little bit better because I love electrical vehicles, meaning that I like the future upside of this. If you can be in the right one and you can handle this downturn, the next upturn will be good. Nobody knows exactly where the bottom is, and if the world falls into total disaster and chaos, electrical will just die, because all will be about fossil fuels and the amount of ammunition that you have. But we cannot bet on that scenario. We have to bet on a little bit better scenario. And I think electrical vehicles, buying at these levels, I think it is a brilliant opportunity. But you will only know maybe a year ahead, maybe 2 years ahead. I just think this is the time. Personally, I've used opportunity. These low levels, we have to remember companies like NEO was up at 60. Falling down, now it's currently just under 4. I started to buy a little at 10, and I bought much more now around current levels. I will keep increasing my personal positions. Tomorrow will be XPEV, so we will know a little bit more about China and a little bit more about how electrical vehicles move. But the future will be green no matter what. You can call it crazy, you can call them crazy, and I think most of them actually are partially crazy. But the future, anyway, will be changing toward more electrical vehicles. Makes very sense if you live a city. First off, it is something about sound, and then it's something about environment and pollution. Yet, fossil cars are getting very, very nice on pollution, and the new technology is being developed. But it makes very, very much sense having electrical vehicles in the major cities. So I think it's just a market for the future. Enough about EV. By the way, if I didn't say and you're still listening, in a few minutes I will tell you which stock I will go into in the $1,000 challenge, where I have grown $1,000 into $3,000. I will tell you where we was up at 4, then we took a slight fall in NEO actually. Now I have a new stock. Last week I didn't buy any because I couldn't find any trade which I wanted into, but now I have a trade which I feel somewhat comfortable about. We'll get back to that in just a few minutes. Wednesday we'll follow up with Target. Target will give you a little bit more insight in consumer spending, but I don't think there will be anything new. And you will have Zoom and all these things, which was a hype of the huge COVID. I'm not sure these are like the big future. They have grown to a certain size. They have grown to what I think was able to pull out of it. We know that Zoom is here to stay. These kind of meetings are here to stay, but it will not be like when it was back to COVID, unless they manage to make this Mpox just before US election into something. We will see how they will play this card. Politics are politics, but nothing is currently at these levels where we should start to see some sudden shutdowns. But you never know. Future will eventually hold. Future will eventually hold a huge breakout of virus. It's just how it is. I told you COVID was exaggerated totally because you could very early, me as a person who loves statistics and knows everything about it, when you saw the mortality rate very early on, you knew that okay, this was not the big pandemic. But pandemics will come. It's just how nature works. Next one can come today, can come next year, it can come in 50 years, but it will come. Usually it comes in a certain cycle, and we are where the cycle should be. Saying all this now and following Biotech for a long time, I like Biotech. Biotech is extremely high risk, and I will give you one Biotech stock which you can look into. But the Biotech is also a place where you can make plenty of money if you're able to pick the correct one. They are working on cancer, they are working on everything from making your teeth regrow. Huge upside if you're able to find a good one. So I suggest for everyone to have at least one Biotech stock in your portfolio if you have a big enough portfolio. Try to pick one or two which you have strong personal belief and you can back it up with some good articles, because many of these are just getting money, and eventually running out of money, getting more money, and your stock is just diluted over and over again until it has no real value. But one of few of these biotech stocks do the 100 times during a year, seen it over and over again, 10 times, very easy in a biotech stock. On Thursday, there will be Advanced Auto Parts. Somewhat interesting company there. We spoke about it. It will be Peloton and the Viking Therapeutics and Workday. Friday will not be very much. There will be some different sales numbers, home sales numbers, etc. But moreover, there will be some feedback about Fed. 10-year Treasury yield, we like to follow this one. Fell, but is creeping up, showing that the real professional investors are not sure. It was up at 440s or 460s, fell down to 389, currently sitting at 389, but a little bit was down at 360, and now it's crawling up again. So I think it shows that the professional investors maybe think the same thing like me, that maybe we are not totally finished with inflation yet. Trying to come to a conclusion, there was no really big candidates to move the market. Fed on Friday, far long. I will hold my small guess on market doing a slight fall back towards 17,000 points this week. There is two things more we can look at, but to try to do this, and one thing is I just developed at getagraph.com, where I test all my IDs. There is a market status, and you will see if you go to it, I will show, I will post the graph on the YouTube version. So if you are listening on audio device, on YouTube I will post a graph showing the latest tool which I've been developing over some time. To try better time the top and the bottoms. That one is currently showing a buy signal, getting a little bit higher again. So we will see how it will. But I will post so you can see, and you can check it out anytime. Go to getagraph.com, click market status, and you will find it for short, medium, long term, how my systems read signals. So I believe slightly downturn in the markets. Nikkei, by the way, which has been trading during the night, is down 1.77% closing, while China is up. The buy and the sell signals, let's end there before we get to some actual trading tips. The buy and the sell signals, they say that across all things we are up from 21% last week to 27%. We start again to get a little bit high. Nasdaq 16, nothing drastic about Nasdaq, but we know a lot of Nasdaq companies didn't move last week. Plenty of upside in some of them. New York Stock Exchange up at 43. This is a little bit too high. In week 29 and 31, it was up at 48 before turning very, very bad. So we're getting close to level where there should be a correction in New York Stock Exchange. London down at 13, Frankfurt at 31, Tokyo up from 6 to 14, nice week in Tokyo there. Shenzhen China from 16 to 20, and the National Stock Exchange of India from 36 to 32. Looking at the Indian Stock Exchange, shows that it's within a very nice rising trend, facing a little bit resistance above, and during the week you will know if it will hold, or we also will see a change in the exchange of India. And here are a few stock tips before we get to the $1,000 challenge. For India, I've been saying for weeks now, Bharti Hexa, and I still remain bullish to this one. Didn't move much last week at all, but first spoke about it was 1090. So there is a few more stocks in India. I will get back to a few of them. The reason why I mention India is because a lot of my followers are from India. India, very, very growing market. I read somewhere that 50,000 trading accounts was opened every day, are opened every day in India. So they are on the huge upturn that we see in some Asian countries. And by the way, BRICS is getting stronger. getting into a new payment system which they're slowly implementing among all their countries. BRICS, Brazil, Russia, India, China, Saudi Arabia, etc. These are getting momentum. What will that make for the Visa stock price? Well, here you can take a guess, and if you make the correct guess, I think that you can make some good money. For US, I found two stocks which I think could do good during this week. One is in the financial sector called Root Inc., ROOT. Not too highly traded, but look to me to have plenty upside with very little risk on the downside. Of course, if markets go really south, then it will be bad no matter what. But the Root, ROOT, look to me to have some potential upside. Then there is Incyte, INCY, Incyte Pharmaceuticals. Look to me to have a nice, possible, strong upside. Both of these come from relatively low RC positions. Some support below, plenty of nice upside above, and can do. I will follow up, I'll tell you how it went during the week, because I can be way off, but in general I think these two stocks may have a good upside. 25 minutes into the podcast, $1,000 challenge. So what will I do? Last trade was into NEO. We were up at $4,000. NEO was up at $470. I hold on to NEO because it, as I said, it's huge volatility. It moves a lot up and down. But in the end, my 2 weeks ago, my stop loss 1.5 weeks ago was cut. NEO was out at 386, leaving a loss of 9.6%, bringing the $1,000 challenge back to $3,042. Still, we managed to grow $1,000 up to $3,042. I want back to 4,000. 4,000 means that I need around 25-30% upturn in the stock which I pick. So I cannot go for them. We can do this in many ways. We can do this go slow, and I told you a few stocks over the time which to me looks to be steady growers. But 5% will not do. So this $1,000 challenge, which I said from the very beginning, is high risk. It's a very high risk portfolio. You shouldn't follow unless you're willing to lose money and can afford to lose money, because here I do not play the safest card. I try to make it a little bit safer, finding some resistance below, but as I said, I will follow one specific strategy which has done before, worked very well for me before, but it implies high risk, and that strategy is buying stocks which is oversold on the relative strength index, having support below, showing the signs of a possible bounce up, and we are in for the bounce up, which usually is. And here we get back to something I said maybe 5 minutes into the podcast, 1/3 or 2/3 upturn from previous fall. Usually good money, and that made my first bank account smile many years ago, and I wanted to just see if I could do it one more, follow the same strategy, and let you see how it works. What stock will I go into this week? Well, it will be a stock we've been into before. I will try Fate Therapeutics. Oversold, huge possible upside. I think it can be the one stock bringing us back to $4,000, but Fate Therapeutics is the stock which I will try to buy today as cheap as I can. Usually it's some half hour after opening. Get the best price I can. And next week I will tell you how it goes. Are we able to get $3,042 up? So far this is going much slower than expected, but it's a little bit hard because I always tell you before I buy, it's a little hard to do this. Normally you will just trade in and out during a day. As you see this, when you have these huge falls, 3% down, usually then I just pick everything and I do 10-15% easily. And I did so when the market was very volatile 2 weeks ago. As I said, now it is the kind of market where you should do it. It's a little harder when allowing you to follow this. I have to wait until the Monday before telling you what stock I will buy, so you can see that I'm actually doing it. But Fate is the stock which I will try to buy today as cheap as I can for around $3,000. I have $3,042 in the $1,000 challenge account. So I'll try that one, see if we can make Fate a good bet. Little low liquidity from time to time is a little bit worried. It's not how you should, usually you should go a little safer than this, but we will see how it is. 30 minutes, time to say goodbye. I had a nice week last week, ending the week yesterday with some metal detecting, not finding much, but a few items, of course, made my week end on a good note. I hope that when you end this week, it will be on a good note where you're looking at your bank account or your trading account and it's greener than it was in the beginning of the week. And of course, I hope you like, subscribe, and being back next week for next podcast. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.